Bloomberg Audio Studios. Podcasts, radio, news.
Welcome to Merryn Talks Your Money, the personal finance edition of Merryn Talks Money. In these bonus podcasts, we talk about the best strategies for making the most of your money. I'm Merryn Somerset Webb, and this week we're back with another installment of Bloomberg Wealth's Where to Invest series. This time we're asking the real question: where to invest $1 million? Last time it was a mere $100,000, so this time we are going bigger. With us again, Bloomberg personal finance and wealth reporter Suzanne Woolley, who joins us from New York. Hi, Suzanne.
Hey, Merryn, how are you?
I'm good, thank you. Now, listen, you've been all over the place recently. You've written this great story about how to invest $1 million, but you've also been at a big conference for financial advisors and wealth managers in Miami Beach. I love Miami Beach. You know, I spent an entire year when I was 18 on Miami Beach. Gosh, great.
Wow.
I know. Those are the days. Tell you about that another time. That's not for this podcast. different subject. Anyway, they were in Miami Beach. What did you hear there?
You know, I didn't hear a lot of rah-rah U.S., I guess, unsurprisingly. Mm-hmm. I heard a lot about international, and you will not be shocked to hear that a lot of people were talking about private markets, private capital, private equity, how to do your due diligence on private market investments, how to do your vetting of investment managers, and also, you know, a lot of bonds, which was sort of refreshing. The one area I would say did get a lot of attention was that Michael Saylor of Strategy showed up, all dressed in black, looking like some sort of, you know, rock star. Don't you think
that's a danger signal? Just before you say anything else, when people turn up all dressed in black like they are a rock star, and they're kind of not actually a rock star. For me, that's a red flag. It
is to me too, you know. And then there was another sort of famous tech analyst from Wedbush Securities who was all in like, I don't know, neon colors and colorful sneakers and a funky hat.
Red flags.
Yeah.
And what did they say?
Well, you know, they were preaching, you know, the gospel of Bitcoin and crypto. There was nothing downbeat about it at all. And actually, the Michael Saylor panel got the biggest, you know, standing only room audience. A lot of young guys on the beach in their, you know, polos and shorts and flip-flops. And he was just saying that he called Bitcoin the most successful commodity in like the history of, you know, mankind. And, you know, a lot of superlatives like that, as you would expect. When I privately talked with people at the conference, just in a bunch of little sit downs, I would ask them this sort of silly question, but like Bitcoin or gold? And no one said
question,
Bitcoin.
Suzanne. That's our question.
I'm sorry, Merryn.
That's right.
It was
I give it to you.
It was a flawed question because Bitcoin is not a hedge, you know, as we know, in down times in 2022, et cetera, et cetera. So it was a flawed question, but everyone was gold. And everyone was saying, you know, Bitcoin maybe is a hedge in terms of like a FOMO hedge, and maybe it's what they use to judge excess liquidity in the system, whereas consumer sentiment. But, you know, one man, Brian Belsky at BMO Capital Markets, said, you know, he wouldn't even call it an asset. So there were a lot of true believers mixed in there, and then a lot of more skeptical people that I spoke with.
Okay, and you mentioned that one of the people you spoke to, Emily Rowland, was a bit not that into Europe. Thinks it's all a bit overdone, and that maybe you should just hang out in high quality in the US instead.
She was, I mean, she's not rah-rah U.S. large caps for sure. She's saying they seem priced to perfection, and that, you know, when you're looking at like 20 times forward earnings, that's not exactly a screaming value. But she was also saying that, you know, she didn't feel like Europe was really, Europe is a trade on sort of banks and industrials, and she was saying it's a very cyclical trade, whereas, you know, the U.S. may be sort of priced for perfection, but it has higher quality earnings. So if people are worried about like a global growth slowdown, she was saying, don't you want to be in the place with the highest quality earnings? So she was sort of the rare person to not be positive on Europe. Gabriela Santos that I talked to, who's the chief market strategist at JP Morgan Investment Management, she was very pro-Europe and pro-Japan. based on, starting valuations, based on fundamental changes. She had a really fun fact, which was that since 2022, the MSCI Europe and MSCI Japan had outperformed the S&P 500 if you took out NVIDIA, which I thought was an interesting little factoid. And so she's very positive on the fundamentals for Europe and Japan going forward.
It's interesting. I mean, I'm thinking as you're speaking about what Emily Rowland said about how you should be in the highest quality companies that you can find if you're concerned about a slowdown or if you're concerned about any global difficulties, uncertainty, etc. And all I can think of when someone says something like that is Microsoft 2000, when I think it fell over 60% in a year.
Yeah,
and
I don't know.
And you would have said at the beginning of 2000, oh God, things are a little ropey, everything's too expensive, terrible stuff might happen, so I'm going to go as high quality as I can go. And you still would have lost 50, 60% of your money in a year. So when people say that, when people give this high quality argument, I slightly think to myself, do you know what I would get out of right now is that high quality stuff.
Interesting, because too much money has raced into it already.
Yeah, that's in the price, but it's more than in the price. And that makes it not safe anymore.
I think that's a great argument. I mean, she did say that she was, in the U.S. markets, more interested in mid-cap stocks, saying that they're about, 30% a discount to, the large cap universe. And that, of course, they have, stronger balance sheets, less debt load, et cetera, than small caps. So she at least wasn't really pounding the table for large caps. Yeah. She was going a little down the capital spectrum.
Still interesting, isn't it? Right, we better get on to the $1 million because, I know everyone out there is thinking, well, yeah, Bitcoin, Microsoft, but what do I do with my spare $1 million? Because that's the kind of listeners we have here, Suzanne. That's the people. What do I do with my spare $1 million?
I ask myself that all the time. Merryn.
All the time. Now, what was the best answer you got this time?
Okay, I thought the best answer, this is probably one that you will like, was Andrea DiCenso, who is a portfolio manager and strategist at Loomis Sales, said that she would go with a 60-40 portfolio, but not as you would traditionally think of it. She would put 40% in European equities.
Feisty.
And the 40% would go there, and then the 60% would go in a basket of global fixed income. And the only reason she wasn't higher in European equities was because she sees such a advantage in bonds right now, sort of globally. So that was interesting to me because I don't think I've talked to anyone who has put that much into European equities in a 60-40 portfolio.
Yeah,
usually it's just some sliver.
Exactly. So it's really interesting to see someone out there in the US who would like to remove not just home bias, but all home and go abroad. Although I'm interested that she thinks that fixed income is that safe in what looks to me like a inflationary rising interest rate environment. I'm not sure that I would have gone 60% fixed income. That is feisty too. Yeah,
she does have it in a wide it's pretty well diversified, some in asset backs, 10% in U.S. and European investment grade corporate bonds, 20 in high yield, and the last 20% she put in emerging market corporates and sovereigns. So she's placing a broad bet there.
Interesting. And you know what? She is my favorite, by the way. You're right. I mean, she's particularly my favorite for her alternative idea because, you always asked if it was a non-financial thing or something, a little alternative, what would you do? And she said, I'd spend that money going somewhere amazing every weekend with a different friend. I'd just constantly cycle my friends and places. And she went to her sister for trip number one. It's going to take more than a weekend. They'd go to Argentina and Chile and hike around Patagonia. And that's something that my husband and daughter just did. And yeah, that is worth a lot. So this is a woman after my own heart, although I didn't go on that trip.
Me too. That was my favorite as well. I mean, one person mentioned buying a Picasso drawing, which apparently you might be able to get for about $1 million.
Oh, goody.
Yeah.
I don't know. I'm a bit nervous about the art market, actually, but...
Interesting. Another segment, huh?
Another segment, but it's another thing that with high interest rates, a piece of art is worth less than it is with low interest rates, and there are a few cracks developing in the art market that I can see. So maybe we'll come back to that another time. What else did we get? I was interested in Anne Berry, who talks about public markets being expensive and therefore maybe go into private markets, and she talks about private credit.
Yes. Ann Barry, who's the founder of Threadneedle Ventures, she was sort of, along with another woman in the package, she was talking about areas where there have been dislocations. And it's sort of interesting in this time of excess that we may be in the U.S., that they were talking about areas when so much money flowed into the commercial real estate markets and venture markets and due to low interest rates back in like 2021-ish, 2022. So she was looking back and saying, there are opportunities when there's a lot of pressure on PE funds to, exit these investments that they've had. They usually hold them for 5 to 7 years. It's getting on sort of 6 to 8. So she was saying there's a lot of pressure in getting these exits happening, and that can lead to some very good opportunities for private capital, because all of these deals require private capital. So, as the industry exits these deals, there's a ton of dry powder sitting out there in global PE funds. They have to go out and spend it. And when they do, they'll be using private credit to some degree.
Yeah, it's interesting, isn't it? I mean, it feels like the whole industry is in a little bit of a paralysis. The deals that they want to exit from, the reason they can't exit from them in the main is because the price is wrong. So there needs to be something of a price reset, and private credit does have a role in that.
Yes, that's true. And I don't know, with the volatility that we're seeing now, people had thought that this window might open, but...
Well, this was supposed to be the year of IPOs, wasn't it? Again.
Yes.
Yet another year of IPOs that hasn't worked out. And I remember reading at the beginning of the year that this would be the year of private equity IPOs and the great exit year. And that was all going to work out really well, because with valuations being so high in the listed market, that translated through into peer companies in the private market, and they'd be able to get out at these great prices, to which the answer today is whoops.
Yes. And maybe there's some opportunities in that sort of situation and all the dislocation. People are saying, in times of distress, there's always opportunity, right? Speaking
of which, you had Maura Pape from Bernstein Private Wealth Management talking about something very similar in terms of interest rates, commercial real estate, which obviously has had a nightmare time with rising interest rates as well.
Yes, very much so. And I mean, her argument was sort of similar, that she thinks, though, that commercial real estate prices have reset to a new reality. And so, with a lot of debt coming due, and lenders right now are going to be less likely to offer the attractive terms that they did when they originally made the loans. There are going to be solid properties that have issues with their capital structure. And, that may make them available at a discount. And she was pointing to multifamily housing in particular, where multifamily housing starts are expected to drop, like some, in the South, that could be an interesting place to put capital. And I mean, she also made the point that, of course, the ability to raise rents, means that you have something of a hedge against inflation.
Yeah. And she was she the other one who was also interested in buying art? Was that her alternate as well?
Yes, Merryn, she was the one who was interested in buying art.
Because there was one who specifically went for a Picasso, and then there was someone else who said they collected contemporary art.
Yes, you're right. Ann Barry collects contemporary art. And an artist she said she loves and hasn't bought yet is Rebecca Manson. Who creates these sort of wall sculptures and ceramic wall sculptures. They're very fascinating. They're like butterfly wings, and very hard to describe. But yes, she's not buying particularly with appreciation in mind, which is always what they say you should do about it. Buy what you love. Don't buy it thinking it's going to appreciate.
So, Suzanne, trip to Patagonia or ceramic wall sculpture with butterfly wings?
What a question. I don't know. Okay, I loved Andrea DeCenso's idea about traveling every weekend with family and friends to different areas. So I have a few. I would have a sister's weekend with my two sisters in New Paltz, New York, which isn't very exotic, but there's a beautiful place up there called Mohonk Mountain House where you can go hiking. I'd go there. Internationally, I've never been to Amsterdam. Dying to go there. I'd grab some friends and go there. I want to go to Santa Fe, New Mexico. What about you? Where would you go?
Well, pretty much anywhere. In the UK at the moment, we're so heavily taxed, and, endless talk about wealth taxes and tax your pension and taxing this and taxing that everyone I talk to is just like, yeah, whatever, I'm going to spend the lot. Die broke. So, the UK is on the move. But I tell you, I do really want to go to Chile and Patagonia. Everything my husband and my daughter told me about it sounds absolutely amazing. Left me behind this time, but I think I can try and, get another trip out of them.
That's great.
So there we go, everybody. If you have $1 million, just spend it. Just spend it. That extra $1 million, that is. Just spend it. Spend it on mainly travel. Thanks, Suzanne.
Travel. Pick up a little art while you're traveling.
Yeah, maybe travel first and art if there's anything left over from your $1 million.
I like that.
Thanks for listening to this week's Merryn Talks Your Money. If you like our show, rate, review, and subscribe wherever you listen to podcasts. Also, be sure to follow me and John on X or Twitter at MerrynSW and John_Stepek. And also Suzanne, who is at Wealth Watch. This episode is produced by Summer Sadi, production support and sound design by Moses Andam. Questions and comments on the show and all our shows always welcome. Our show email is merrynmoney@bloomberg.news.